Hello, everybody, and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today, we're going to be analyzing Visa stock. This one came in by request down in the comments section of one of my other videos. If you have a request you'd like me to take a look at, just put it down in the comments. I'll get the ticker on the whiteboard behind me, and Visa is right there on the bottom of this column, so it will soon be erased, and I'm about halfway through the other column too, so working my way through these at a pretty good pace. If it's a stock that's in the S&P 500, I post those on YouTube for free. The rest I post over on Patreon at the $5 per month tier level. I also have a $25 a month tier level over on Patreon where I share one stock idea each week. Whatever the best idea that I can find in a given week happens to be, that's what I share it, even if it's not quite at my buy price. So far they all have, but we're running out of, the market has been on such a run lately, it's kind of hard to find stocks that are at the perfect prices that I prefer to buy them. But if you're one of those people that like my analysis but think my stock prices will never hit the buy prices, then that weekly ideas service is for you. I also have the full Cyclical Investors Club service over on Seeking Alpha that I've been running since January 2019, almost 6 years there now, and then I've been writing at Seeking Alpha. I'm on my 10th year writing over there. That link will be down in the description as well, along with a 25% off affiliate link for Fast Graphs, which you will see me use in this video. Okay, as always, not individual investing advice, just how I analyze stocks. Visa. So they went public back during the Great Recession, and basically they have like perfect earnings record since then. Hard to argue. It's returned over 2,000%, which I suppose since we haven't had a real recession since then isn't too surprising, but it's still a fantastic return, like a 20 bagger. So good job for everybody that's held Visa all that time. Let's shorten this down to a more recent time frame. I'm going to go ahead and leave up those years, I think. So I'm going to use a time until payback analysis for Visa, which takes the earnings growth and the earnings yield, and it helps determine how long it would take for the earnings from the business to pay back an investment. So if you bought the whole business for $100 and you own the business, how many years would it take for that business to earn $100 in earnings? Okay. And we can use this to give us an idea of how quickly we'll earn our money back and really how quickly our money could compound, assuming that the business can keep growing at a good rate after that. So this is a pretty useful analysis. I think, honestly, this is how Warren Buffett does a lot of his analysis. He might use cash flows or something like that, but it's a really good way. You can use it for public businesses, private businesses, rental properties, bonds, loans, anything, because it's really measuring how fast you're going to get your money returned, right? Return of capital instead of return on capital. So first you worry about how soon you'll earn your money back, and then you can worry about what you'll make after that, right? That's the kind of philosophy behind it. So let's start with the earnings growth, which is the first metric we need. So if we just look on the fast graph from 2016 or mid-2015 through 2027's expected earnings, they expect earnings to grow about 15%. If we look at what analysts are expecting, they only expect 11% growth this year, 13 in 2026, and 15 in 2027. When I do my own kind of calculations, the last time that I did them, I'll include this decline in earnings and modest decline in 2020, but I still include that because if you're collecting earnings, you know, the fluctuations matter, not just the point-to-point growth. Like if they lost a bunch of money one of these years, well, if you own the business, you would actually lose a bunch of money. You're not just steadily earning 15% growth each year. So I do manual calculations where I figure that out. I also control for buybacks, which I think they've had a little bit of. So when I do that calculation, I come out with I think it's 13.68% expected earnings growth, which is basically right in line with what analysts are expecting. So that's what I'm going to use, ever slightly more conservative than the fast graph. So in order to calculate the earnings yield, which is the earnings over the price instead of like a PE ratio, which is price over earnings, they tell you the same thing. It's just expressed in a different way. And for this type of analysis, the earnings yield, it makes it really convenient to calculate. So I like to switch it to that. I'm going to use forward earnings of $11.20 per share. and the current price, which on fast graphs is a earnings yield of well, fast graphs isn't necessarily using those forward earnings, but they do give you an EPS yield here, which is 3.24%. I'm going to be pretty close to that. The only other very small adjustment I'll make is they have a minuscule amount of debt, so I will adjust the stock price up just 2% for these calculations. So really it's just tiny adjustments all along the way, a little bit to earnings growth, a little bit to the earnings yield. So let's get into the spreadsheet with that. Okay, so the real price right now, $316.09. I'm going to treat it like it's $322.41, which is almost no difference basically. And my earnings, and then I'm going to use forward earnings. So my earnings yield is actually a little higher than the fast graph, which is 3.47%. That's mostly because I'm using forward earnings. But my earnings growth rate will be a little slower than the fast graph at 13.68%, as I explained earlier. So with those two metrics, we can calculate how long it would take to earn your money back if you bought Visa's business, assuming those assumptions turned out to be correct. Let's see where I have. Okay, so I have the earnings yields. Yeah, so the way this works is if you bought the business for $100, you would earn $3.47 on your $100 the first year, and then that $3.47 would grow 13.68%. Now I pull that first year's growth forward. So if I scroll far down on my spreadsheet here, if you just want to see what it kind of looks like. So here's the earnings yield on $100, $3.47. The first year would yield you $3.95 for every $100 basically that you invest. And then each year that would grow that 13.68%. So the next year you would make $4.49, and then you collect that each year as time goes on until you see how long it takes to collect $100, which was your assumed initial investment. So I started on my spreadsheet at 5 years because nothing really pays you back sooner than that nowadays unless it's like crazy risky. So if you follow this along, after 5 years you would earn almost $26. And if you keep going, after 10 years you would earn about $75. And after right about 12 years is when you would cross that another $100 on your initial $100 investment. So the time until payback for Visa is 12 years. That's pretty good relative to the average stock in the market right now, which is 14 years for the S&P 500. That's like high quality payback time. So I think it's undervalued relative to the market, not quite as cheap as I would like to see it using this method. I'm going to test a couple of prices here to see at what point this gets to like 10 years. And then we'll see, what price that would be. So I'm going to guess maybe like 250 is a good starting point here. Not quite that low enough. Sometimes I do this ahead of time, but it's good to just kind of show you. Okay, so like 230, 235. Looks like 237 is the price that it would only take 10 years to earn your initial investment back via the company's earnings. So that's not, too much lower than where it trades today. Let's go back at now one note of caution. What did I say? 230 something? Okay. So yeah, just actually as soon as October of last year, the stock traded that low. So yeah, it's been a little over a year since it's traded down there. But you can say with any kind of weakness that it probably could get back down there. Now, one note of caution I would say is that's probably not where I would be buying it right now, unless I knew for sure we weren't going to be having a recession anytime soon. Because like I said, a recession probably sends this stock down 50% off its highs. So if the reason the stock price is falling is because the economy's starting to fall, I would be much more cautious. At least wait for maybe below that price and positive momentum. I probably wouldn't be buying it on the way down until it got cheaper. And then I have a separate calculation kind of that I use for that. But I thought I'd use the time until payback for Visa. If we do have a recession and it starts getting low, I'll make another video and I'll show the other method as well. All right, if you found this useful, hit the like and subscribe button. If you have a request, put it down in the comments, and I'll see everybody later.